Hello everyone, my greetings to each one of you. This is the 20th session on National Income Estimation. In the previous session, you have understood about the compensation of employees as a component of income method. I am Poonam Vohra from Macroeconomics Learning Center. This session focuses on another component of income method, that is operating surplus. So let us understand more about operating surplus. Operating surplus is related to land, capital and enterprise as the factors of production. So it is the income earned from property comprising of rent, royalties and interest, and from entrepreneurship comprising of profit. So far as rent is concerned, it includes actual rent and imputed rent, and royalties comprise of the income received from granting leasing rights of subsoil assets. For example, owners of mineral deposits like coal, gas, etc. earn income by giving rights of mining to the contractors. So far as interest is concerned, interest income is earned from capital, but it does not include interest paid by government on public debt, interest paid by the consumers as such loans are meant for consumption purposes, interest paid by one firm to another as it is included in the profits of the firm which pays it. So far as income from entrepreneurship is concerned, it comprises of profit which has three components. One, corporate tax, that is tax paid by the companies on the profits earned. Then is dividends to be given to the shareholders. But one needs to take note of the fact that dividends paid by one firm to another is not included, as these gets included in the profits of the firm that pays. And third component is retained earnings. That is a part of the earnings which is retained by the companies. So for operating surplus, one needs to include rent, royalties, interest. Under profit, it is corporate tax, dividends and retained earnings. All these components need to be included to calculate operating surplus. Mixed income is related to the combined income from all the four factors of production. It is the income of self-employed and refers to the income generated by own account workers and unincorporated enterprises like retail traders, small shops, and arises from the productive services of self-employed. So total factor payments cannot be segregated as they do not maintain proper accounts like profit and loss account or balance sheet. They simply prepare income expenditure statement. For example, income earned by consultants, lawyers, doctors, CAs having their own practice. Now assess yourself and identify whether the following statement will be included while estimating national income or not. Interest paid by a firm to a bank. Please check your answer. Interest paid by a firm to a bank will be included in the estimation of national income because such interest is paid on the loan which is taken for productive purposes, as it is considered as a factor payment by a firm. So it will be included. Now look at this statement, whether it will be included in the estimation of national income or not. Interest paid by a bank to an individual. Please check your answer. It will be included in the estimation of national income as it is a factor payment made by a bank to an individual, as such interest is taken on a loan meant for production purposes. Now look at this statement and identify whether this is included in the estimation of national income or not. Interest paid by an individual to a bank. Please check your answer. This statement is not included in the estimation of national income because it is a non-factor payment, as the loan is used for consumption purposes, since such loan is taken by an individual from the bank. To conclude, domestic income by income method comprises of income earned by the four factors of production, that is land, labor, capital and enterprise. Income earned by four factors of production is categorized as compensation of employees, to labor, operating surplus, to land, capital and enterprise, and finally mixed income to all the four factors of production. Further, compensation of employees has three subcomponents, that is wages and salaries, compensation paid in kind and social security contribution. Operating surplus comprises of rent included royalties, interest included imputed rent and profits, whereas profits are further categorized as corporate tax, that is tax on profits to be paid by the corporates, dividends paid to the shareholders, and retained earnings which the companies maintain with themselves. So by including all these components, one gets domestic income or NDP at factor cost. I hope you have understood the concept of operating surplus. With this, the session comes to an end. The next session focuses on the various steps involved in the estimation of national income by income method. Till then, keep reading, keep learning and keep practicing.